Well, India recently passed a bill that opens the door for changes to the way UPI payments are charged. The bill removes a legal barrier that currently prevents banks and payment service providers from levying a merchant discount rate or MDR on UPI and certain other digital payments. And that immediately raised a question: will UPI no longer be free? So let's break this down for you. First, what is MDR? Well, MDR is essentially a fee paid by a merchant to a bank or payment processor for processing digital payments. UPI has operated under a zero additional charge model, so merchants have not been paying this charge. However, now the government says any MDR, if introduced, will be nominal and limited to a smaller set of merchant transactions. The UPI and Services Steering Committee will decide whether MDR is actually introduced and how it is structured. Now, what does this mean for you? Well, the government says person-to-person UPI payments will remain free. So if you're sending money to a friend or family member, there is no new UPI fee. And the government says the vast majority of merchant transactions will also remain free. But some high-value business payments could be different. So who could face higher costs? Well, the likely target is large merchants and high-value commercial transactions. Some reports have indicated that an MDR of around 0.25 to 0.4% could be allowed on non-person-to-person UPI payments above 2,000 rupees, with a cap on the charge. Small businesses below a specified turnover threshold exempt. That is not the final MDR structure yet. Now that means your routine payments for things like milk, vegetables, auto rickshaws and taxis are not expected to be affected. Large retailers, e-commerce platforms and other high-volume merchants could bear the bulk of any new cost. Now, just because person-to-person transactions or small merchants are for now exempted from MDR, it does not mean the consumer will not pay any additional costs. If a merchant has to pay MDR, who absorbs that cost? Well, the business could absorb it, or they could pass that cost on to the consumer. The government can ensure there is no direct UPI fee on the consumer, but it cannot completely control how every business sets its prices. But the shift to MDR marks a move away from the zero-cost model that helped UPI scale rapidly, but also left banks, fintechs and payment networks carrying the cost of that growth. With transaction volumes surging, the government is now looking to create a direct revenue stream to help fund the infrastructure, cybersecurity and technology required to keep the digital payments ecosystem running. The proposed levy is also significant for a trade perspective. Global card networks have long argued that zero-cost UPI gives India's domestic payment system an advantage over international card networks that operate on a fee-based model. By targeting only high-value merchant transactions, the government is attempting to balance two objectives. First, keeping digital payments affordable for ordinary users, while making the payments ecosystem more financially sustainable, and potentially easing a key point of friction in India-US trade talks.